Intel's profit fell 14% in its third quarter as the chipmaker was impacted by the secular decline in personal computers. Spanish bond yields hit 6-month lows after Moody's affirmed the country's investment grade rating. I'm Lindsay Bell, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the Morning Call Express. Yesterday we saw great follow-through after an update on Monday, and this morning the market is going in with a positive tone. The futures are, despite what we saw out of Intel and IBM last night, those numbers weren't great. So how do you set up for today?
I think after Monday, people figured we would get a bounce, but then on Tuesday, which was yesterday, people didn't think we'd get a second day that was so strong. So coming in today with the futures up a few handles, after seeing IBM down almost 7-8 points or Intel down, a percent or so, I think people still want to buy stocks. We've been in corrective mode. We pulled back about 3% off the highs, but that was bought. The 50-day was bought. I think people are now saying that 1425 might have been the low of the move. So at this point, I think guys are trying to reshuffle their portfolios.
Do you think digestion is what we need to see from the market now?
It'd be nice to see like 1 or 2 inside days. If you take a quick look at the chart of the S&P, you will see, again, from the lows, we've had a very methodical move to the upside. And if you take a look here, a little bit of hindsight, you'll see that all we really did is, remember this high here and this breakout here? All we did is retest this more gradual trend. And every time you've bought here, you've been rewarded. So we talked on Friday about covering shorts. Monday was a good spot to, test some longs. You had paid some follow through. And now, here you go. We're coming into this downtrend. What I like to see is I'd like to see a little sideways action. Let some charts reset up, and then I do think it's only a matter of time before we take out 1460, and then at some point take out the highs of the year, which comes in around 1474.
Let's take a look at IBM and Intel because those two stocks are important to the market. IBM, they beat earnings, but they missed on the revenue line. The stock is down 3% last night. I think it's down 4% this morning. Is there a trade here? What levels should you watch?
I don't think they're going to give it a pass. It just might not close in the lows. And if you're a trader that doesn't take stock into earnings, you know what? This could be an opportunity. And this is one of the reasons why you don't. Obviously, sometimes you have big gap ups, you miss out on some gains. But on a move like this, if you take a look at IBM, look at where it was. It was coming into the highs, almost historic highs. And I talked, I think, the last week or so, talking about how potentially in Europe, slow down public sector exposure. So right here's your 50-day moving average. I would say around 202 to 203. That's definitely worth the spot. I wouldn't just try and buy a falling knife. But if it puts in a low in the first 30 minutes right around here and trades off it, maybe you buy some back, but if it doesn't come off the lows today, I would just avoid it and see maybe at another particular point down the road, the 100 days right around 198. And as far as Intel, the street wasn't expecting much at all. This has been a sell since August. Market rallied from August through September. What did Intel do? It just declined. This is a slowdown in a group that's going to probably continue to slow as PCs and just handhelds are the place to be. So at this point, I guess if you want to trade versus a level, your level is 2140.
Let's take a look at the Qs too while we're talking about tech because they saw a big move yesterday. It was nice to see them finally participate with the rally. Where do you expect them to go from here?
Well, right now it's retesting a support that turns into resistance. So today will be an interesting day. If you look at the chart of the Qs, you will see that this was very helpful to us telegraphing the actual correction. This was your small head and shoulders top. This actually broke the 50-day way before a lot of other groups, so it gave you clues to get out early. So this way you weren't getting out at the bottom. Here is your red dog reversal Monday. You'll follow through Tuesday, and some guys will be trying to sell this area. They'll be trying to sell 68 and change, and it's worth a try. But I do think at some point, the Qs are going to continue, tech's going to continue to go. I would watch to see how it acts today. I think some guys will try and short this area. I know for me, I might even, do the same thing with the spiders. As the spiders, I just had a nice little move into resistance. I think maybe, a cute short up here versus a long, but then I do think the bigger money is going to be made positioning back into a portfolio approach as we head into year end.
Okay, well, we're going to get into all this and more, a lot more sectors, a lot more stocks in the long form version, so be sure to tune in for that.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. fill in your name and email address, and I'll see you on the other side.